So in our last class we looked at the decision to engage in tax evasion. Why might a person under or non-declare income to evade taxation, and how the government can maybe implement or change the decision made by individuals, where it depends on the tax rate, depends on the probability of detection, and also depends on the penalty or fine. What we're going to look at today is the size of the black economy. How much actually activity out there is out there that goes unreported. So the CSO report the formal economy in their gross national product, gross domestic product figures, but what is excluded from that? And by definition, any area of concern that contains a significant illegal element is going to be deficient of reliable statistics. The CSO don't have a regular black economy update. The whole objective is to go unreported. So they can track official companies, they can track employees, they can track retailers, producers, manufacturers. But when it comes to the cash or informal economy, there's a dearth of statistics. So one of the main objectives of participants in the black economy is to conceal their activities from the authorities, either because the activity is illegal in the first place, selling drugs, prostitution, or because they want to avoid taxation, earning income in the cash economy, selling cigarettes in the cash economy, or other activities where they want to avoid paying taxes and excise duty. So the figures quoted for the black economy are as varied as the methods used to generate them. If you offer an estimate of the black economy, it's very hard for anybody to dispute it. You could say there's no black economy out there. You could say it's 20% of the overall economy, or any number in between, simply because it's quite difficult to come up with an actual measure. So there are various approaches that have been applied and used to try and get an estimate of the black economy. What is happening out there that we don't see? So we'll work through some of these before applying the final one to an Irish context. So the first approach is based on voluntary surveys and samples. So if you don't have official statistics, well, go out and try and find your own. However, most people will underestimate tax evasion on their part when asked. So stand on Patrick Street, carry out a survey, stop people in the street, give them 5 or 6 questions. How much tax do you evade? People will either underestimate it because they don't want to be honest, or they'll underestimate it because they don't think it's significant. So just exchanging money between people for particular goods and services, there's perhaps many who wouldn't view it as being tax evasion. A second approach is to use the tax audit and compliance methods by the revenue commissioners. So they undertake tax audits and look and see, can you gauge from what the revenue commissioners find? The one issue with the revenue commissioners' approach is that they don't do a random sample. If they do 5,000 tax audits, it's not randomly drawn from all tax returns. They target their resources at areas where they think tax evasion is most likely to occur. So revenue commissioners could carry out 5,000 tax audits and find underdeclared tax income in half of them. Is that going to suggest that 50% of tax returns are non-compliant? Well, no, because the 5,000 revenue picked are the 5,000 high-risk categories in the first place. They're the areas they were targeting. So if we just look at some of the findings by the revenue commissioners. Tax evasion. So looking at, is there details here? The revenue report on a fairly regular basis the amount of tax evasion that takes place. So here are settlements the revenue have made maybe over the last 7 or 8 years, up to the start of 2009. And the average settlement, this is the total settlement by quarter. So you're dealing with fairly substantial amounts of money, up to 400,000 average total settlement by quarter. So most are around maybe 100,000, but have been increasing through time. If we look at the number, did that take me backwards? Again. The number of people that the revenue find. So this is the number of published tax defaulters by quarter based on the revenue figure. So you can see it start of 2003 and has then been falling since down to around 100. So of the audits they take, these are the number of published tax defaulters. To get into the published list, you must be above a certain size. If you owe the revenue a couple of hundred, they're not going to put you on their tax defaulters list. It must be above a certain threshold. I think the threshold is £10,000, so about €12,700. So you can see here it peaked at around 400. But this is basically not because tax evasion increased, but because of the targeting activities of the revenue. The reason for the peak here is the investigation they were doing into non-resident accounts, non-resident deposit accounts, where people were trying to avoid dirt tax. So they put money on deposit in Ireland and you earn interest. That's an income. It's liable to income tax, and the income tax for interest income is dirt. Deposit interest retention tax. So it's called deposit interest retention because the bank takes it before it gives you the interest. So the rate of dirt is now 30%. So if you earn €1,000 interest in a bank, they'll take €300, give it to the revenue, and give you €700 net interest. But what emerged in the late 1990s, early part of the last decade, was that there had been widespread evasion of dirt in Ireland, beginning from the 1970s. One issue with taxation is that it's for services provided by the government. If somebody from the UK or Germany or the US places money on deposit in an Irish bank in Ireland, why should they pay tax to the Irish government? What services are they getting from the Irish government? So non-residents are exempt from dirt. If a non-resident puts money in an Irish bank, they get the full amount of the interest that's due to them, because they're not getting anything from the Irish state. So what happened was that lots of people, Irish people living in Ireland, were putting money in banks and declaring the accounts to be non-resident. Basically what you had to do was sign some sort of a declaration form, give it into the bank, and they would, in a sense, assign the bank the account non-resident status. With interest rates where they are now, it doesn't seem that significant. ECB interest rate at 1%, you might get maybe 3%, 3.5% interest with money in the bank. But throughout the 70s and the 80s and right up to the early 90s, there was frequent occasions where interest rates were over 10%. And dirt tax was 35%. So if you had £1,000 in the bank at 10%, that was earning you £100 per annum. If dirt is 35%, you're losing 35 out of that 100. So you multiply that by a scale, put 10, 20, 100, 150,000 cash into the bank, when suddenly your dirt liability could be running into thousands. If you can evade that, there clearly is gains to be got. So there was widespread evasion, and it does appear that the state knew about it. There are reports that the central bank was aware of it in the mid-1980s, that it had been happening since the late 1970s, and were aware of it. But they were afraid of capital flight, that they were afraid of genuine non-residents taking their money out if the central bank and the revenue started investigating. There seemed to be suggestion that money would leave the country. And this is at the time when we had our own currency. We've had huge capital flight in the last number of years, but it's had no impact on our exchange rate. We're part of the euro. What did it matter if British and German and other banks took 60, 70, 80 billion out of the Irish banking system? We had to find somewhere to replace it, but it wasn't going to have an impact on our exchange rate. But back in the 1980s, when we had the Irish punt, if huge amounts of people withdrew Irish punts from Irish banks and tried to offload them, the exchange rate could be changed dramatically. So there was this fear of capital flight. If they started investigating, do these people want us poking around in their business? So they decided not to investigate it. But by the mid-90s, the Public Accounts Committee, actually under Bernard Allen, who was the chair of the Public Accounts Committee at the time, did a study into it. And their objective was to find out the extent of the tax evasion. The central bank in the 80s said it was there, but didn't go exploring any further. They knew what was happening. But the Public Accounts Committee in the Dáil went to investigate it and found that it was widespread. Hundreds of thousands of accounts and almost as many people engaged in tax evasion, and most of it complicit with the banks. It's been put down to starting in Milltown, Malby and Clare in about 1976. spread to virtually every bank and branch up and down the country. So this peak here in 2003 is basically the end of the revenue investigation into the non-resident accounts, or sort of the peak of the investigation to non-resident accounts. And then decline since then has been sort of the winding down of that investigation, the amount of money they were declaring, and now it's more normal. So one issue with using the revenues tax audits is that they're targeted. If we looked at this, would we say that tax evasion increased hugely in 2003? That the number of checks they did reported a far greater number of defaulters? Well, the issue is, of course, that it's where those checks were focused and directed. They were directed at the non-resident dirt accounts. And these are, remember, tax liabilities of more than 10,000, so quite a large number. In our last class, we focused on the difference between the amount of the tax and the fine that might be incurred. So in this graph here, you have a distinction between the amount of tax due and the total settlement. And you can see the amount of tax due is in some cases less than half of the total amount collected. The fines, penalties and interests are actually what causes the amount due to increase. And if you look at some of the peaks, you can see some of the fines must be quite substantial. So you can see here, there's a minor jump here in the amount of tax that was supposed to be collected. But look at the amount that was actually collected when the fines were added in. So you would expect a jump here. It's clear that the fines far exceeded. The same in this instance here, that somebody was maybe caught for a major tax bill, but what they were very much stung for was the fines and interest on top of that. So while the revenue will ask for the tax they were due, as a major disincentive to engage in tax evasion, they will put fairly hefty penalties on top of that. The last issue we look at, we're looking at by geography, is where the revenue target. So this is a poor scan of something from the Examiner at the start of last year. So the top 5 tax defaulters within the worst offending occupations, where do the revenue target their work? So most of it tends to be in the self-employed, business, company director areas. So the largest claims you can see, can't read it, are in construction. And in fact, the largest settlement was for 22 million for a company called Beauvale Developments. So 22 million is a huge liability. I'm sure it wiped out that company. And then more for large millions of amounts for construction. Company directors, farmers, legal, publicans, medical, landlord. And this final one here that's quite difficult to read is actually religious. You remember the story of a Father Tig O'Donovan who made a settlement with the revenue commissioners for over €400,000. So the church is a charity, so it doesn't have to pay tax on its income, so it's not under declaring the money he collected in the basket on the Sunday. To have a tax liability of 433,000, there clearly was something else going on. It does drop off quite dramatically. So the last name there is a tax liability of 14,000. So Peter Clancy in Dublin 7 was just over the threshold. But these are where the revenue target. And you can look at all the names that are there. So using the revenues figures might be useful to give an insight into what's happening, but when you want to look at the overall size of the black economy, it may not be too appropriate. You can look at national income accounting to get 2 measures. So at the macro level, the gap between income and expenditure approach has been considered. So the CSO have various methods of calculating national income. They can look at how much money people spend in the economy, or look at how much money people earn in the economy. If the accounts were fully accurate, they should be the same. What one person spends should be what another person earns. So the income and expenditure approach should give the same. There is a third approach to measuring national income. That's the output. That's the value of stuff produced. So the CSO have 3 methods: the income, the expenditure, and the output. So in national accounting, the income measure of national income, GNP, should be equal to the expenditure measure. So the argument is that the black economy will not show up as income, but will show up as expenditure. There's no incentive to hide expenditure. There are no tax implications for spending money. Just because you spend money doesn't mean you have to make a tax return to the state. The tax liability tends to fall on the person who gets the money. So spending money doesn't introduce a liability. So one suggestion is that the expenditure method will give a higher measure of national income than the income method, as people will try to under-declare income but might not under-declare expenditure. However, the discrepancy reflects omissions and errors everywhere in the accounts, and not just the black economy. The CSO provide an estimate of national income. They don't go around asking each company and each individual what their income and expenditure was. In many cases, they just survey and then infer from that. So it could be there's the gaps, not because of the black economy, but just because of errors, omissions in the surveys. A related approach uses the microdata from the CSO, so the household budget survey, to estimate the extent of income understatement by the self-employed, thought to be significant evaders, simply because they have the ability to do so. In the PAYE sector, it's quite difficult to evade taxation, this being the key defence that Harry Redknapp used during the week in his tax trial. What did he say to the Crown Prosecution Service? Why are you accusing me of being a tax evader? I'm a PAYE employee. Portsmouth give me money. I assume they're paying the tax to the revenue. I'm just like any other employee. Why should I have to make a tax return for money I get from my employer? 12-person jury considered it and said, well, it makes perfect sense. It's not up to the employee to make the tax return, it's up to the company. And Harry got off relatively scot-free, although based on what happened in the rest of the day, I'd say he has a lot to be thinking about at the moment, not just tax return. Although if he's getting Fabio's wages, I'm sure he wouldn't mind paying the taxes. 6 million a year. George Osborne collecting, well, maybe George Osborne prefer Harry Redknapp to get the job. Fabio, I assume, would be a non-resident. So if the FA pays Fabio Capello £6 million a year, none of it goes to George Osborne. If Harry is a resident, they might be able to get the 50% tax on high earners. So a £3 million per annum boost for the exchequer in the UK. So you could look perhaps at the micro approach. So to measure inconsistency in what people spend, and again what they report as income. Again, the suggestion being that there's no incentive to under-declare expenditure, but there may be an incentive to under-declare income. The fourth approach is what's called the monetary approach. This is the cash or black economy. So if we get some measures of cash out there, can we use this as an indication of what's happening in the black economy? The basic idea here is that in order to conceal income, currency is the main transaction, or transaction medium. So the transactionary motive for the demand for money. Why would people want cash? Simply to avoid detection of particular transactions. So rather than using bank deposits, bank accounts, checks, bank drafts, money orders, there might be an excess demand for cash in the economy because people want to undertake transactions that aren't reported. So by deriving estimates of excess currency holdings and tracking this variable over time, it may be possible to estimate trends in the black economy. Look at the amount of cash that's out there. Look at what the CSO are picking up as being the official measure of national income and say, well, is there actually too much cash out there? Could there cash be flowing around for transactions that go unreported? So could there be a surge in the demand for cash based on the transaction medium because people want transactions to be unreported? And if you look at what's happened with bank accounts, with checks, with money orders, look at how much cash that would be needed. Is there perhaps extra cash out there? So this is the monetary approach. So this is based on the quantity theory of money. So multiplying the average velocity of circulation. The velocity of circulation is basically the number of transactions that any particular note is involved in. So if there's a €50 note out there, it can move from person to person, paying for goods and services. So the number of transactions refers to the velocity. How quickly and how often is the money used? And with the total value of currency and bank deposits. So this yields a total value of transactions. So if there's, we'll just use simple figures. If there is €100 of currency out there, and each unit of currency is involved in 5 transactions, well then the total value of transactions is 500. So the total measure of national income would be 500, but in order to generate that you just need €100 of cash, because each unit is used 5 times. So 5 is the velocity, 100 is the volume, and then 500 would be the total value of transactions. So if you look at the economy and say, well, how much cash is out there? What is the velocity of money? And then compare that to what the CSO says is national income. So this predicted nominal GNP can be compared with what the actual accounts to give a measure of the black economy. So the CSO go and measure what they can see, go to the central bank and say, well, how much cash is out in the economy? What level of transactions could that sustain? And then compare the two. And if there's a big gap between them, it might be that lots of transactions are going unreported. However, a difficulty is that demand for currency reflects a number of factors other than the extent of the black economy. So while you have the transaction motive for holding on to cash, there might be the precautionary motive, just to have cash at hand. There might be, it's hard to know the investment motive unless you expect interest rates to fall. But there might be, I suppose, the investment, the speculative motive for holding cash. If you think the banks are going to go belly up, one area that's seen a bit of an increase in demand in Ireland in recent years have been domestic safes, where people have doubts about the ability of the banks to repay and are put the money in a safe. So that might lead to an increase in cash holdings. So it's not necessarily that people are engaging in more transactions. They're essentially putting the money under the mattress, where the mattress could be a quite expensive safe. So if you see a surge in the demand for cash, one reason could be what we have here, an increase in cash transactions, but there might be other reasons behind it. So what is the significance of the black economy? Well, last Friday we mentioned one. It calls into question the reliability of official statistics, making GNP look too low and unemployment too high. If there actually is income out there that goes unreported. So one of the big issues in the ongoing Eurozone debt crisis has been debt to GDP ratios. Greece at 160%, Italy at 120%, Ireland at 107%. That is the official measure of government debt to the official measure of GDP. So in order for those figures to be reliable and useful, well, they must be accurate. In Greece, both figures were out. Their debt figure completely hid a large part of their debt. They were involved in transactions through Goldman Sachs, and they were able to roll over and hide debt that didn't appear in their official accounts. They put it through special purpose vehicles, kind of off balance sheets. We're doing the same over here, but we kind of do it visibly. We just set up NAM and say, look, we owe 30 billion, we'll tell you about it, but we won't put it on the accounts. Greece was doing the same, but telling nobody. And then when the credit crunch hit and Goldman Sachs couldn't roll over these things, couldn't find money to give people, the Greeks, the money underhandedly, it sort of emerged and they had to go to the market to borrow it. And their debt ratio bloomed. But their GDP figures could also be too low because of the level of the black economy, the amount of tax evasion that takes place. Much the same in Italy. When you say how much debt can a country sustain? Well, you look at the size of the debt, you look at the size of the income. If neither of those figures are very accurate, well then you're not maybe being able to make a true judgment of what's happening. So the size of the black economy can affect issues such as this. From a macro perspective within the economy, taxation policy is based on redistribution. However, if the policy has to rely on inaccurate official data, it's left operating in the dark. So perhaps helping those who are not badly placed to the exclusion of more deserving others. So perhaps people are earning money that the system doesn't know about. So you might offer them benefits, might offer them reliefs that they might not necessarily want. So it can be an issue in relation to social welfare and taxation. Who do you tax? Who do you give the money to? And the issue here is ongoing in Ireland. There's also the issue of missing taxation. If a given volume of tax revenue is to be raised to meet expenditure commitments, evasion by some raise the tax rate faced by others. So in Ireland we have to increase our tax revenue. But there are many who argue that the money is being raised from easy sources. those who can't avoid. So the PAYE sector gets brought up frequently as being an easy source. So you get many people claiming that the common, the working man, the middle earner will suffer because of increases in tax because they have no ability to avoid it. Whereas high earners can use legal advice and accountancy advice maybe to avoid taxation or get tax breaks. And of course low earners will be out of the tax net in the first place. So tax revenue is increasing and some people aren't paying their fair share in the sense of tax evasion. Those who are paying may need to pay more. And this can lead to sort of a sense of bitterness emerging between those who are paying and those who are not paying. And given that people may have different opportunities to indulge in untaxed income sources, the tax system may end up receiving a disproportionate amount of its finance from what are so-called easy sources, as opposed to getting it from across the entire range. A monetary estimate of Ireland's black economy is where we'll take it up tomorrow. We'll do some econometrics. Keep those Friday evening people a bit happy.